It's the end of the week, which means it's time for the weekly wrap-up. It's also the end of time for Janet Yellen as the Fed chair. So let's go in deep with Ken, the FX freak. So this week, Ken, Janet Yellen had her last rate-setting meeting. How will her departure impact the dollar?
Yeah, so long, Janet Yellen. So what does this mean for the dollar? Well, in terms of Powell, her successor, he has a similar tone traditionally to Janet Yellen. He's also known to be quite a dovish member within the FOMC, as we've seen from recent rhetoric from himself. But in terms of Janet Yellen, she has flown out as more of a hawk rather than her dovish nature. They've set themselves up potentially for a hike to come in March for the Federal Reserve. The particular thing that stood out for me is them seeing inflation picking up towards their mandated target, getting closer to that this year. So that is pretty much a dollar positive. However, for me, the dollar is still very much on the back foot. If we look at the dollar index, you've got the basket of 6 currencies. The dollar is really being outperformed across the board. As I mentioned last week, investors are seeing other economies as more attractive to invest in. We're seeing a lot of flows out from the dollar and into these other respective economies. And for me, really, the only game changer that's going to see the dollar change sentiment is if the Fed pick up in terms of their tightening of policy. And at the moment, I can't see that. And, I think they're being really optimistic with seeing inflation picking up because the signs at the moment aren't for that to happen anytime soon, in my view. So for me, I'm still seeing a lot of weight on the dollar's shoulders.
Now, Theresa May has managed to secure a £9 billion trade deal with China. What does this mean for Brexit? More trade deals ahead?
Yes, a really good bit of progress for Theresa May and Britain. So for her securing that deal between China and the UK, it's of £9 billion, so nice and chunky. And essentially it's going to create over 2,500 jobs across sort of the goods and services sector, which is awesome. And yes, it does look like there are more trade deals to come. Behind scenes, UK are working on the trade deal with Canada and also the US. We actually had comments yesterday coming out of a Trump advisor saying, come on UK, let's essentially sign this deal, which is obviously it's never as easy as that. But there are some promising trade deals being worked in the background. They're really trying to step up trade deals after obviously they've agreed to depart from the EU, this Brexit. So they have to really to try and ease people and let them know they're still a dominant country. So yeah, those are all being worked away, and it's promising. And for me, the pound is flying at the moment. And if we look at cable, and as I say, with the dollar underperforming, I can really see 150 plus this year, in my view. So yeah, really promising for the UK.
Now, for the crypto traders, it's been a hard week. Bitcoin has fallen under $9,000. What does this mean for the cryptocurrencies? Is this the end?
Goodness, I really don't think this is the end. There's so much worry and panic at the moment driving the cryptocurrency markets in general. All the sort of the major altcoins are coming under heavy pressure. Yes, we saw Bitcoin breaking that psychological $10,000 mark firmly, sparking a lot of selling across the board. Ripple broke 80 cents. There was a large amount of support there, and we're currently in the 70-cent region at the moment. And that's despite the fact that South Korea came out, and these are one of the reasons behind sparking some panic in the market, that they were going to proceed with banning. But the South Korean, one of the ministers came out and he essentially said that there's no intention to ban or suppress the cryptocurrency market, which was good news, but that hasn't had a positive impact at all. And yes, I do believe there is some further downside for me. If I look at Bitcoin at the moment, I'm not sure there's much support seen until around the $5,000, $6,000 region, considering we've taken out a massive sort of support or trend line that had been going on since the back end of September of 2017. So, we will eventually find some feet, but it's a massive correction that I believe the market needed.
Well, cheers, Ken. As always, pleasure speaking with you. Well, that was Ken, the FX Freak, with the weekly wrap-up. Thank you guys for joining us. Have a good weekend. We'll see you on Monday.